Hello, in this presentation we will record the receipt of customer payment on account and the deposit of that customer payment. If you've been working along with us, we will be continuing with the Get Great Guitars problem. If not, that is okay. We will be recording the receipt of payment from an invoice prior received and then recording those deposits. We'll actually have a few different receipts of payments that we will have and show how to deposit those in a group and discuss what the pros and cons of this system is. If you have the backup file, you can restore that by going to the File tab and restoring the backup file. That should take you to this point in time so we're all on the same page and we can see the same invoices. If you don't have that, you can work through the problem. If you don't have that, you just want to look at the received payments, that is okay as well. We currently have the Home tab open, which you can find at the Company and then Home tab. We also want the Open Windows open, which is at the View and Open Window List. And therefore we can see, and then we can see the open windows on the side here. Note that I have a few open windows I do not want open at this time. I'm going to close the checking account. I'm going to close the transaction reports. And going to close the balance sheet. That's the benefit of having the open windows. We can actually see what types of windows are open. We are going to be working with the receive deposit. So what we are doing is we're selling guitars here, and we can imagine the system of we have an order for a guitar, we ship the guitar, and therefore we earn the guitar or the revenue when we did so, and we create the invoice at that time. And now we're going to receive a payment from a customer. We're imagining that payment to be in the mail perhaps, and we're going to record the receipt of payment and then the deposit of that receipt. Remember that this middle icon here is a bit unusual in that when we learn normal financial accounting, we don't typically have this middle journal entry. We just have an invoice, meaning we made a sale on account, we increased the amount people owe to us in accounts receivable, and we increased the sales as well as dealing with the cost of goods sold and the inventory going down, but we're focusing on the accounts receivable here. And then we get payment at some point, and typically, in terms of normal journal entries, we often just put that right into the checking account. We say cash went up, debit the checking account, and credit revenue or credit the receivable, representing the fact that the customer no longer owes us money. But here we have this middle step, and that's going to be the receive payment. What that will do is put the check or the cash or whatever type of payment we have received not into the checking account, but into an account called undeposited fund. It's a form of cash account, but it's an undeposited fund account. They put it in other current assets, but it's pretty much a cash account. And then we're going to take that money and put it in the undeposited funds until we make the deposit. And when we make the deposit, then the goal is for us to make the deposits daily, hopefully as an internal control, and to deposit them in such a way that they will be grouped together so that it will be easiest for us when we make the bank reconciliation, because the bank reconciliation, what will be on our books in terms of the amount of deposit, will tie out to what is on the bank statement in terms of the amount of deposit, and that'll make the bank reconciliation a very crucial internal control much easier to do. So let's do this. We're going to say receive payments. First payment is going to be received from Music Store Stuff. So we're going to go into Music Store Stuff. We could select the drop down or just type in Music Store Stuff and tap through the items here. We have two invoices currently out. Now we're going to say that we received payment only on one of this, invoice number 4, and the payment was for $816.27. Therefore, if we just check off that one, we're going to apply it out to that one. It's telling us that we will be putting this dollar amount in the payment amount, and that is what we want. So we're going to say OK. We're going to say it is a check. The date that we have received, we will be working in the future, and 02/26/21 is the date that we will be using. Check number is going to be 4562. That's going to be the check number from the check that we have received, not our check numbers. So it's an informational form, does not need to be refilled out in order to process the customer payment, but more information is useful, so we will put that information there. And then we see that we have the original, we've got the amount due and the payment. Therefore, there's no more amount due on this particular invoice. We have received the full payment. However, we have not received payment on this amount here. When we record this, then the customer payment form will be, it means that we're going to increase undeposited funds unless we change the settings in order to deposit directly into some other account like the checking account. But unless that is the case, the default will be, and we will keep the default, that it will be increasing the undeposited funds, other side going to the accounts receivable, reducing the amount owed to us, in this case by music store stuff. So we're going to record this and then take a look at that using the forms and see what is happening here. So we will save and close. Then we're going to go to the reports up top, and we're going to look at our most common, most familiar reports, that being first, the balance sheet. Changing the balance sheet dates, we're going to go up top to Customize Reports, and we want to have the dates to be in the future of 01/01/212, 12/31/21, looking at the year that we will be working in, and then say OK, and there is our report. Undeposited funds, it didn't go into the checking account, it went into undeposited funds. That's down here. That's the new account, that's the confusing account, that's the account that often people have problems with. And we check on that. If we double click on that, we scroll down, we see that we do have the music store stuff, that $816.27 right there. If we double click on that, we see that we have our customer payment, and that is the data that we have just input. We're going to close this back. We're going to close this back out. Other side of this, what happened? Well, people do not owe us that money anymore, particularly music store stuff doesn't owe us that money, that particular customer. And that is the receivable account, then must be going down. If we double click on that, zooming in on that, scrolling down to the payment from music store stuff, other side in the split section, in the split column, going to undeposited funds, we see that same $816.27. Double clicking on that, we see the customer payment once again. If we close this out, one other area we might want to note where this is happening would be up to reports, scrolling down to customers and receivables, and we want to look at the customer balance detail. If we look at the customer balance detail for music store stuff, we see that invoice for $816.27. We see the payment for $816.27. We see the payment for the invoice for $630, and no payment for the invoice $630, and therefore that's still remaining as due from music store stuff. Note that the total of this adds up to, this report, this customer balance detail adds up to $1,402.42. That then should be the same amount on the balance sheet. If it's not, you probably have a date thing going on. It's probably that the two reports are run as of different dates for some reason. Let's go back over and do this one more time and see this process once again with another customer. We're going to go to the open tabs. If you don't have the open tabs open, you go to the view at top and open windows. We're going to scroll to the home tab, and then we're going to receive another payment. It's been a good day for us at the Get Great Guitars. We've got 2 payments here in the mail, so that is good. The next one was from Anderson. So if we select the drop down, there's our customer list. We're going to type it in there, Anderson Guitars. Tabbing through this, we see that we have one invoice from Anderson. That's the one we got. That's the check amount was for $525. So we're going to go ahead and check that off. We're going to say that's okay. That's the one we want. And in this case, sorry, the check was not for $525. The check was for $275, the amount due. And this one was the item in which we had a deposit in advance. So we received a deposit in advance of creating the invoice. Then we created the invoice, tying it to the deposit. And now we're collecting in the mail the final portion of the payment after delivery of the guitar of the $275 still due. So here's the original invoice amount due. This is the amount that we received in the mail with a check for the final completion of this guitar payment. and that will bring the balance down to 0. We're going to have the same date here. Check number is going to be what happened there? Check number is going to be 5321. And once again, that's not our check number. That's the check number on the check we are receiving from the customer. Informational information, not required, but useful. Once we record this, then we will once again see that the customer payment will increase, not cash, but the undeposited fund, not the checking account, but that undeposited fund account. And the other side will then be going to accounts receivable, reducing the amount of accounts receivable due to the fact that we received payment, and therefore we don't, our people don't owe us as much money. In particular, Anderson does not owe us as much money, if any money. I believe Anderson will owe us no money after this payment. So we're going to say save and close. Of course, we're going to remedy that shortly by selling Anderson more guitars soon, or more guitar parts, possibly guitar services. Then we're going to go back to the balance sheet up top and see if that is what happens. We're going to scroll down to first undeposited funds and double click on the undeposited funds. Scrolling down, we see that 275. Double clicking, zooming in on the 275, we see the customer payment. Once again, the input form. Closing this back out. Closing this back out. Scrolling up to the receivable. Here is the receivable account. Double clicking on the receivable. Other side, we see that payment here. The other side in the split, undeposited funds. Reducing the receivable. Double clicking on that, we once again see the customer payment amount. Closing this back out, closing this back out, looking at the one other report, that being the customer balance detail for Anderson Guitars, which should be at the top in alphabetical order in this case. And we see that the 275 has indeed been paid there. So if we look at the pattern here, we got the 5,000 was invoiced, so that was our beginning balance and invoiced before we started the company. And then we got a payment for that. Then we had the 430 invoice. Here's the invoice over here. And then here's the payment. Here's where it says it's a payment. And then we had this kind of funny thing where we got paid before the invoice, that invoice being 525. And then we matched the invoice to the deposit we got before the payment. And then we got the rest of it here, and that zeroed it back out, now resulting in Anderson not owing any more money. And a time for us to go see if Anderson needs anything new, because Anderson looks like a good customer for us. So we're going to go back to the Home tab over here, and then we're going to record the deposit. So we've got a couple checks in the mail. We're going to run to the bank with those, deposit them at the end of the day, as is a good internal control. As we do so, we will group those deposits together, and they will be recorded in our system as well as on the bank statement once we receive the bank statement at the end of the month in the same format, in a grouped format. So if we select the record deposits, we see we have 4 deposits currently open. If we had no deposits open, this little window would not show up. We would just have this deposit window. These 4 checks basically mean that these are all in undeposited funds, and we need to take them out of undeposited funds and deposit them into the bank. So we're going to check all of them off. We got all these. We're going to say we really got to go to the bank and deposit this stuff here. So we're going to say check them all off. Okay, there they are. Total deposit $1,641.27 is what we have in undeposited funds at this time. The date's going to be 2/26. And once we record this, the fact that it is a deposit into the checking account will increase the checking account balance by that $1,641.27 and decrease the undeposited funds by the $1,641. And let's record that and see that that is the case. Hopefully it will be. Save and close. We're going to go back to the balance sheet here. Oh, that's not the balance sheet. We're going to go back to the balance sheet in the open windows. And if we select the checking account then, looking at the checking account, double clicking on the checking account, scrolling down, we see that we have a deposit here of the 164127. If we zoom in on that, we then see our deposit. and that has been recorded as we believe that it would be. Closing this back out, closing that back out, scrolling down to the other side of this transaction would be the undeposited funds, but it's not there. It's not there anymore. What happened to the undeposited funds account? It's now zero and therefore no longer on the balance sheet. So we could check it if we want to go back and check it. I want to see the detail. I'd like to go to the undeposited funds, see it's been recorded there, double click on it and see that it's going to that same deposit. We could do that in one format by going to lists up top, chart of accounts, and the undeposited funds is an other current asset, so it's going to be up near the top. Looks like it's right there undeposited. It's got zero in it, we can see here, but if we want to double click on it, it'll give us a register similar to a check register type format. And we'll see that if we scroll down, we are at zero down here in terms of the total balance in the undeposited funds. It's breaking out those deposits, however, in different amounts here. So it didn't give us the one lump sum. We're not seeing the one lump transaction. We're seeing the 4 checks that were deposited. If we look at those, in terms of this check, for example, this is an increase or a deposit. This is a decrease. So let's look at this last one, $275. There's our deposit here. So here's the $275 being one of the components of that total of $1,641. So if we close that out, that's one way we can go in and verify this information is there. So we can close this back out. Note if we go back to the balance sheet that when we recorded this, both when we recorded the receipt of payment, let's go back to the Home tab, both when we record the receipt of payment and the deposit, neither of these affect net income. Although we got cash, although we got checks, and although we deposited those checks, we had not increased revenue or net income, nothing on the income statement or the profit and loss statement, because we already had done so when we recorded the invoice. When we recorded the invoice, we increased, or QuickBooks increased as we made that form, increased revenue by the amount of revenue generated and increased the other side, accounts receivable. All we're doing over here then is not really doing the work of delivering the guitar and earning the revenue, but just receiving payment of what has been due to us for the revenue that had been earned in the past.